things to look at on Bitcoin here. So short term, we have taken out the FTX high. All right, now, again, whether or not we've confirmed, it doesn't really look like we've confirmed here, but we are consolidating a beginnings of a potentially bullish consolidation chart pattern, all right? So when you have sideways candles, that means a recent move is being digested. Think about you just went to the buffet, you had a huge meal, you go back, you sit in front of the TV, you digest your food. You're not going to go run a marathon as soon as you eat the buffet, right? You're going to get cramps, you're going to feel disgusting, you're going to throw up. So the same kind of principles here apply to charts. And again, remember, charts are nothing more than representations of humans, right? It's millions of buyers and millions of sellers coming together with their emotional kind of mentality, and they're buying and selling. That's how charts are created. So essentially, you can really relate charting to basic things in the human world. Okay, so again, big buffet eaten. Now it's slowly digesting. I don't personally think it's digested enough, but it's starting to get digested. If we continue up, your upside is going to be 25,000. Now, 25,000 is a big level, not just for this pivot, but if we extend this line out, it also goes to that low right here, which was this last big drop low. So that to me is a big resistance. It's even bigger than where we currently are, which is at this pivot high, because it has a secondary pivot low here to kind of reinforce the nature of this resistance. So if we do go up, 25,000 to me would be an epically big level.
Bitcoin refused to surrender gains at the January 23rd Wall Street Open as United States equities opened higher. Hello and welcome to Money Talks. In today's video, founder and chief market strategist at InTheMoneyStocks.com and verified crypto investing Gareth Soloway updates about Bitcoin's current market standing, the final bottom in crypto, and his outlook for Bitcoin in 2023.
If that continues, I think 25,000 at 25,000 for me personally, I will probably start inching in on a short position. Okay, next up, let's take a look at a couple other things here. So that's your short term on this. In the longer term, couple things you want to just keep an eye on, looking at support. So let's look at support. So what if Bitcoin starts to roll over? This is a big trend line here, folks. Notice pivot to pivot to pivot all the way through here. So this little upsloping trend line would be a big one. And then if we do finally break that, which I do anticipate at some point, then this low pivot would be here. So short term, your upside is to 25 potentially. If we start to decline and we start getting below this area, you start watching for this upsloping trend line.
Bitcoin managed to conserve its trading range over the weekend with a local low of $22,315, allowing bulls to avoid a major setback. The mood remained buoyant among risk assets on the day, with the S&P 500 up 1.3% and Nasdaq Composite Index trading 2% higher. Gold, too, disappointed those hoping that a retracement would set in after weeks of impressive returns, something analyst Alistair McLeod put down to classic principles of supply and demand. With Bitcoin up 40% in January, a further point of concern focused on the temptation to take profits. In the latest edition of its weekly newsletter, The Week On-Chain, analytics firm Glassnode nonetheless pointed out that long-term holders remained broadly steadfast in their resolve to not exit the market, even after more than a year of losses.
This is the S&P 500. Right now, we are seeing the spiders up about 57 cents on the day. A little bit of an uptick following Friday's big move. Now, the biggest thing to note is that on Friday, we had this consistent kind of grind higher all day long. And the biggest thing to know about this, folks, is that we need to know if this was a real move on Friday or it was an options expiration move. And the difference is really important because a real move means there's real buyers and sellers. A more manipulated move means that the institutions going into options X wanted to raise the S&P, raise stock prices so that certain options that had a lot of puts on them would expire worthless. And these are the games that get played in the overall market. And this happens with crypto. This happens with commodities. You'll see on options expiration Fridays, a lot of this maneuvering. So what I'm looking for today is, does the market hold its gains from Friday? Do we build on those gains? All right. And again, that'll be determining whether or not this was a real move or it was just a flip up on Friday to negate the puts that were in the money, that were put in the money on basically Wednesday and Thursday's drop. Now, if we look at this chart, right, I have a bunch of trend lines here. I want you guys to only really focus on these trend lines, all right? So I'm going to get rid of everything but this. This is called a wedge pattern. And a wedge pattern essentially is telling us that the market is consolidating in a tighter and tighter range. And ultimately, it's going to break out. It's going to be forced to break out when it gets to a head over here. All right, so the question is, do we break up to the upside or do we break to the downside? And I'm going to tell you right now, there's no easy answer here. All right, markets in the near term can try to lure in more bulls by short-term breaking above, kind of getting above this level for a very short amount of time. The bigger question I'll be looking for is, does it confirm? Does it confirm the breakout? And again, if you know the confirmation signal from the Winning Trader series, that's really what we're talking about here. If it breaks to the downside, which I believe eventually we will do, that's where you start a bigger decline, where eventually you retest the lows from October and eventually head to my first target of 2023, which is 338 and change on the SPY. That equates to about 3,400 on the S&P 500. Okay, now let's talk a little gold here. We're going to get to Bitcoin. We're going to get to all of this stuff out here, guys. But again, let's take a look at gold. Gold is down slightly on the day, and I want to show you basically where we are. So number one, gold has had a remarkable move from October lows all the way up. Now, interestingly enough, if we look at the DXY, take a look at this. When did the dollar top out? The dollar topped out in October, or right going into October. So essentially what this is showing us is that as the dollar weakens, you're going to see upside in gold prices and generally in commodities. If you look at the lows on oil, if you look at the lows on silver, it's generally going to coexist together in opposing directions. All right, now one of the things that's catching my attention here is this trend line right here on the US dollar. We could even raise it up just a tiny bit right in this vicinity. So what does this mean? Well, this to me is an indicator to be a little bit more on the cautious side of the stock market, maybe crypto as well here. And I'm going to explain. So what it's very clear, and if you look at the stock market and basically we look at gold prices, we look at crypto, we know that as the dollar was rallying up, the stock market was selling. As the dollar has fallen, the stock market has rallied off its lows. So again, if you go back to the lows on the stock market, it's going to coincide basically with the highs on the dollar.
Bitcoin accumulation was mostly led by large wallet sizes, less than $1 million. These wallets and large players absorbed the supply that came post the FTX collapse and the plethora of other bearish events, analysts noted. The increase in the number of wallets with $1,000 and $10,000 has upticked since the second week of January. Bitfinex analysts noted, adding the metric was a sign that smaller investors were likely just joining the Bitcoin rally while wallets hold their spot positions.
Generally means we could see a technical bounce in the dollar. The extrapolation of that needs to take us to the idea that the stock market may be getting a little bit tired. Okay, so again, that's the key to kind of understand here. All right, and again, I'm not saying that the dollar is going to go back to all-time highs. I honestly don't believe that. I think the dollar is probably topped, but I do think even just a technical bounce in the dollar, like just imagine if we just go back to even this area right here, which will be resistance around 103.75, that would be a catalyst for the stock market to potentially sell off. Okay, so just a little tidbit on that. Again, I am short-term bullish on the dollar here for the next week or two, then we'll reevaluate. Therefore, for me personally, from these levels, S&P right now, Spiders is at 396.50. I'm going to be net negative. I'm accumulating essentially my portfolio. I'm slowly accumulating some shorts on the S&P, on the NASDAQ, with the full idea that we could have a short-term pop to squeeze weak hands out above that trend line I showed you. So again, when you're looking at swing trades, you start accumulating when the probabilities start to shift, in this case to the short side or the downside. It doesn't mean you go all in, right? We don't go all in here. We just kind of inch in. Then if it pops a little bit more, we inch it a little bit more. We build our core positioning, which then protects us from going all in here, and then it pops here, and then we freak out and we react emotionally. Remember, emotion is your worst enemy. The markets will use that. All right. Essentially, the markets, think of the markets as a great white shark, and emotion is blood in the water. All right. You do not want emotion. How do you mitigate emotion? You mitigate emotion by essentially going small enough that you don't have that emotional reaction when a price goes against you a little bit. That's going to happen in trading. You need to learn to read charts and ultimately trust the charts and use your position size to mitigate your emotion. Okay, let's talk a little bit more here so we know what's going on there. I'm going to talk about Bitcoin real quick here. So let's get into Bitcoin and let's go here. Here's your dollar chart on Bitcoin. And again, I put in this longer channel. I'm just kind of curiously watching it to see longer upsloping channels do eventually break to the downside. But again, it was just something I was taking a look at there that we do want to keep an eye on as well. Now, short term, couple things to look at on Bitcoin here. So short term, we have taken out the FTX high. All right, now, again, whether or not we've confirmed, it doesn't really look like we've confirmed here, but we are consolidating a beginnings of a potentially bullish consolidation chart pattern, all right? So when you have sideways candles, that means a recent move is being digested. Think about you just went to the buffet, you had a huge meal, you go back, you sit in front of the TV, you digest your food. You're not going to go run a marathon as soon as you eat the buffet, right? You're going to get cramps, you're going to feel disgusting, you're going to throw up. So the same kind of principles here apply to charts. And again, remember, charts are nothing more than representations of humans, right? It's millions of buyers and millions of sellers coming together with their emotional kind of mentality, and they're buying and selling. That's how charts are created. So essentially, you can really relate charting to basic things in the human world.
So what are your thoughts about Gareth Soloway's prediction? Tell us in the comments. Also, don't forget to like and subscribe. See you soon with the next video. Thank you so much for watching.